Hey John, it's been another month, and it's certainly been one for the ages. We've had a hell of a lot happen in the last 30 days
hmm
between the U.S. election, big rate cut, 0.5% by the Bank of Canada, the Fed and the U.S. cut. We had job numbers come out that have been abysmal. Man, there's been a lot. Bond yield markets are up, which are keeping fixed rates up.
Yeah,
All these different things that are going to have a profound effect and have been having a profound effect on real estate. And amongst all of that, we had an October month of sales that let's dive into and have a chat about and talk about where we are, what happened, and where we're going.
absolutely. It's been a wild ride the last month. I think it's probably we've got October data. It's we're here. What are we today? November 8th. We don't have November data, but that last rate cut that you touched on, the half point, that was about a week near the end of October 23rd.
Last week of October, yeah.
And that so it's kind of hard to say exactly how that has maybe played an effect or played a role in the markets at large. But I think there's a little bit of life there. It's not dramatic. We've had four rate cuts, 3/4 points and a half point now, likely more coming. But we haven't really fully turned that corner towards a more robust market. I've been looking at the data the last little bit. Most communities seem to be showing a slight uptick in number of sales, which is good. Um, Not where we need them to be, but at least they're
I
a
think
little
when you say
higher.
that, though, we're seeing that by city and town, but if you dive in the neighborhoods, it's really specific in which neighborhoods are seeing effects.
Oh yeah, yeah. So, but I mean, on a more of a global view, whether it's the community, the city or the region at large, to see a little bit of an uptick in sales, I think is a positive. We also saw a little bit of a decrease in number of new listings. And so when you take those two together and you work the equation on months of inventory, average days on market, there was slight improvements in both of those. Months of inventory came down slightly. Average days on market came down just slightly. Again, nothing dramatic, nothing to get excited about. Some of those communities even saw a slight increase in price, which you'd expect, factoring in those other numbers or other details I just talked about. But nothing dramatic. And so I think it's still too early to say whether or not we've turned that corner towards a robust market. But positives nonetheless.
Well, I mean, all of the things that have happened, there's been negatives and positives on the market, but predominantly talk about interest rates. Leading into an interest rate, there's always positivity in the sense that if there's a cut, it's going to bring the market back. But I think
Yeah.
the one thing that really has held that back is that those Bank of Canada rates are only impacting HELOCs and variable lines of or variable mortgages.
Right.
It's not affecting the fixed mortgage rate. And what we're finding and what we're hearing is a lot of people are tending to go back to that fixed mortgage rate because they want that stability. Now, granted, the 3-year mortgage has become more popular, I think, than the 5-year mortgage from what
Yep.
I'm hearing from the brokers I'm dealing with, but still it gives people some sense of stability over that window of time. And
That's
if you track,
understandable. I mean, when you factor in that, they may have had a variable previously and saw their payments rise dramatically when rates started going up. So it's understandable that somebody would be gun shy on a variable today. However, I
absolutely.
think most brokers would tell you that their book of business is increasing on the variable side.
I well, the reason I think we're seeing that is because we're not seeing the shift in fixed rates. And
Well,
if
yeah,
you track the bond market, which the bond market is what drives fixed rates, the yields have been up and they continue to go up. Even after the presidential election this week, we had a jump in the yield on the bond rate
yeah.
on the bond market. So, and that's caused that fixed rate mortgage to stagnate, which again, people are looking at it saying, oh, well, we had a rate reduction, but my position hasn't changed.
Right.
And that's part of that reasoning behind that, why we're seeing that. So definitely, I think there's a bit of an impact there. I think there's also a bit of miscommunication in the marketplace out there with people with how the rate reductions by the Bank of Canada affects overall mortgages and the activity that's happening. So I think a little bit of consideration to there. We have seen a bit of an uptick in overall activity over October, definitely month over month and year over year. But I want to qualify that by saying that a lot of activity has happened in two different segments that we traditionally see it happen, which is the lower priced homes, entry level homes, and the luxury market has seen an uptick in activity. That middle range, that upsized family home continues to stagnate. We are
Oh,
not seeing
absolutely.
activity there. So while we have seen a bump in activity, if you look at the numbers, sales are up, but the average value of sales are down. And that's because we're seeing more low price homes sell than high price. Now, I want to qualify that because if you track the Oakville market, which I predominantly track the Oakville market, we had a big sale our office actually had a big sale this month
Yeah.
in Oakville, $17 million home that sold. I want you to consider something. We had 234 homes sell in Oakville
Hmm.
in October. If you took that 17 million, divided it by the 234 homes that sold, that's $73,000 almost per home.
Yeah.
That's the difference it made on the average sale price of the homes across Oakville. On detached, we had 124 detached homes sell in Oakville. That's $137,000 per home on average if you
Yeah.
took that sale out. And what does that do to home price, average home sale prices that are already down? You would drop them another $73,000 with just that one sale taken out.
Well, and
So,
for a conversation with a client, I think frankly it probably does make sense to back that one out of the equation because it
absolutely.
skews the data, no question.
100%. But that's, again, when I talk about looking in neighborhoods and looking what's going on, that's so critical. But it's also a marker out there that's showing what's going on. That big high price sale right there, when the majority of the homes that sold were below that $1.2 million benchmark. So, profound difference there. Yes, sales are up. Yes, pricing are down. It's actually down more than it shows, particularly in that Oakville market because of that sale.
Yeah.
And that I think is what's misleading the market out there today. Will it turn? I think absolutely it will. But I think we're in this for a bit more of a ride. We've got more interest rates coming in the future. How steep and how fast they're going to happen, we don't know. But I think a lot of people are holding on for that stuff to happen. When we get into the new year, I think that's when we're going to see these people coming off the sidelines.
Yeah, I think there's I mean, and well, I'll preface this by saying nobody knows what the Bank of Canada is going to do until they do
No,
it. But it seems there's a lot of optimism that there'll be another half point cut in December. The job numbers we got today were poor. Um, in general, the economy still needs to, I think, pick up a little bit. But it was nice to see that inflation came down, and that's
yeah.
what made the Bank of Canada feel comfortable with the half point they did in October.
And
Uh,
they're talking about it sitting around that 2% for the foreseeable future. So, I mean, that's all a good
yeah,
indicator.
yeah, and so that should lead to another rate cut of a healthy margin, half point in December. I hope they do. Um, obviously that kind of coincides with the holiday season, which is generally a slow period. So it even though it'll be an attractive rate cut, it may not result in much activity. And it'll take until the early into the new year, maybe even February or March before you see an appreciable increase in activity. But look at using that timeline, February or March. By the time you get to early March, there'll have been three more rate announcements, presumably with three more rate cuts. And then you stack up at that point, that would be potentially six or seven rate cuts all stacked up. But by that point, our rates I think are going to look pretty attractive, and we should see buyers start coming off the sidelines.
I agree. I think, and again, this is not based on factor and else. This is just a feel and the conversation I'm having with people. I think we're going to see a lot more inventory come on the market in the new year.
I think so
A
too.
couple of different things. We've got 60% of the mortgages in Canada coming due in the next 24 months. A lot of those mortgages are variable rate mortgages that people are going to be renewing at a much higher rate than what they signed on in the past. So
Right.
those variables that were fixed payment, those people are going to really feel that burden because they're going to owe more money than they started with potentially, and they're going to be having a higher payment to deal with possibly a lower equity position if they bought at that peak time. So you got a lot of burden coming there. I don't think that'll be the doom and gloom of everything. I just think it'll add some extra burden.
It's a factor though. I mean,
Absolutely.
the good news I think is that those who renewed over the last 2 years have managed and fared better, I think, than many of the big banks were expecting. So that's encouraging.
Yeah. But the other big thing I'm seeing or I'm hearing from people is the amount of people that are waiting to sell in the new year. So those
Yeah.
people that are ready to make that downsize, to make that shift, but they haven't been willing to sell in the turbulence that we've been dealing with for the last 6, 8 months or even
Well,
longer.
if you didn't have an urgent need to sell, and every day you're looking at headlines that paint a picture of doom and gloom, maybe you're going to say, well, I'm going to wait till the things look a little rosier. And who can blame them?
Well, my messaging to these people has been don't wait until we see the market turn to get ready. Get ready now so that when the market does turn, you are able to jump into it. Because what tends
You
to
have to
happen
act
is
quick.
we don't know when the market's going to change till it's already changed.
Yeah, it'll be behind you.
That's it. we can't say it's going to happen on this date. We can assume things are going to happen. We can lay out what things look like or project what they may look like, but there's no guarantee it's going to happen that way. So what I tell people is you want to be able to, when you see the shift happen, be ready to jump in while it's happening, not after it's happened.
Well, and you may not even have the luxury of waiting for the next data set to come out at the end.
No, you're right.
Like sometimes you can just feel it. You
Well,
have
you'll
your
see it in
finger on the
neighborhoods. I
pulse, you know
mean,
what's going on, and if you've got your finger on the pulse, be ready.
and
Jump.
and I mean that's why it's so important to watch what's happening in your neighborhood, not just on a monthly basis or anything else, but if you are looking to make a sale, you got to talk to your realtor and say, listen, keep me updated what's happening. If there's no inventory in your neighborhood and the homes that come up are selling fast, it's an indicator that there's some demand being, built up there, and you want to get
Oh
out in
yeah.
front of it. If inventory is stacking up and they're not selling, then it doesn't mean that means you should probably hold off and wait until we see that shift. But again, you got to be watching that market. Like you and I mean, I live with it on the market on my computer
Hmm.
24/7 because I need to know what to advise my clients on when to get in and what's happening at any given time. And you can't do that if you're not watching the market every day.
Well, you know
So,
how it is. You've got if you've got clients who are in pick any neighborhood, whatever, and whatever their plans are, they're buying, they're selling. You're setting them up with auto emails to notify them of what's happening in their neighborhood. You're probably blind carbon copied on it. That's how I do it. But I also set
yep,
up other custom ones just for myself, so that
I use concierge. Sure. Do you use the concierge feature?
yeah,
Yeah.
yeah. But I'll set up custom ones just for myself to monitor certain things, and that way, in an instant's notice. If some property that's comparable to somebody I'm working with, if
Yep.
that property hits the market and I see 3 days later that house sells for a healthy price, okay, hey, maybe things are happening in your neighborhood and let's get going.
Yeah, exactly. And that's, I find that a lot of the conversations that I've had this year have been with people about being ready for 2025, right? They probably weren't ready yet, or they're working on different things. I find a lot of people really want to be sold before they buy. Nobody wants
Oh
to be
yeah.
in a position where they want to own two homes. And the market we've been riding through have left people vulnerable to that.
Yeah.
So they're definitely in the position they want to sell first. But then they got the other side where they're like, what if we can't find what we want to buy? That's a risk you got to take. But I'd rather have the risk of not knowing where I'm going just yet and know that I'm sold than be in a position where I own two houses.
And can't pay for two houses.
Well, even if you can pay for two houses, the cost of owning two houses is outrageous.
Yeah. But for most people, carrying two isn't likely a viable option. So that would be a very daunting and scary
Absolutely.
experience. Um, but going back to where things are headed, I think we're going to be stacking up a few more rate cuts. Hopefully that has a positive impact, and I think more than likely, it's all weather dependent as well. But I think that there's a good chance by the end of February, early March, early spring. I mean, most people wouldn't call February spring, and really they would be correct. But in real estate, sometimes you get a early spring market that it
I'm
starts
predicting
hitting
that if
into February.
I'm predicting that if we get a 0.5% cut in December and we get good weather in January, by the end of January, we're going to see some uptick in the market. I don't think people are waiting now for February, March, April. I think by the time we
Oh,
hit the new year, knowing that, we'll already know what happens in December. We have another rate, or the first rate cut of 2025 is on the 28th of January. I know we got more inventory coming and people are anticipating buyers are going to be ready to shop. I think you're going to see, as long as the weather cooperates, I think you're going to start to see a shift happening as early as the end of January. February could be a healthy month as long again as the weather cooperates, because if we get a lot
yeah.
of snow and ice, that's a damper for the market. But if that stuff holds off, I think we could have a healthy February. And by the time March rolls around, you're going to be back into competition again. You're going to
Oh, that's
have
what I'm saying. I think we'll be busier by
I
February,
agree,
March,
but I
and
think there's going to be a lot more inventory hitting the market, both stuff that hasn't sold. There's a ton of people who've come off the market or waiting to go back on.
yeah.
There's a ton of people that are holding off going onto the market till the new year. You've got a ton of people out there that are dealing with mortgages that they're trying to figure out, should I downsize now before I got to deal with an oversized mortgage? All of that stuff is going to come together.
Oh yeah,
It's
absolutely.
going to be,
I think you're right about January though, and I think the smart buyers are likely to start. They'll be paying attention. I think you'll see people following the December and January rate announcements, making a move. And I mean,
I gotta say, I
frankly,
don't
I
understand why buyers are not buying now.
oh,
I
you just
can't answer
that's
that
exactly what I
question.
was just going to say. I said frankly, I
I,
was
I
going to say frankly, they should be doing it today.
I have buyers coming in looking at my listings and they're not buying. And not that they're not buying my listings, they're not buying any listings because I'm following up
No.
with the agents. Have your clients bought or they're still interested? What's going on? No, they haven't bought yet. They haven't decided.
Well,
Okay,
they're being
let's get
cautious,
an offer together.
but as you said earlier, you don't know until you've missed the opportunity. It's the opportunity will be behind you before you realize you hit the bottom and passed.
Yeah. So, I mean, to the people that are on the market today, does it make sense to come off the market and wait?
Maybe.
I think the holiday season is going to be quiet, so it doesn't hurt to kind of hit a reset, head into January with a fresh start. But in the sense of should I come off the market today? I think there's still going to be some sales that are going to happen. Mind you, it's not going to be it's not going to be crazy like that, and you don't know when the right buyer is going to be on the market for your house, so it doesn't hurt to be out there and be ready to sell. But by the time we roll around, and again, I go back to the question, why are buyers not buying today? I don't know. Even my own buyers. We've looked at houses. I've checked off 11 of the 10 things on the list they want, and they look, yeah, we're going to think about it. What do you want to think about?
Yeah.
Like, let's get a long closing. Let's go for a spring closing or as late as we can go that the seller's willing to adjust. So you'll pick up all the benefit of the rate reductions and not have to compete to buy the house.
There'll always be somebody who will say that, that game plan worked out for them, but I think more often than not, there'll be people kicking themselves for not having made the move when they could have and should have.
I agree. And it's hard on sellers right now dealing with that. Sellers that are out there and they're dealing with and I can't tell you why do they not want to buy my house when it's not a price issue or anything like that because nothing else is selling around you.
Yeah.
I can't answer the question. But to me, if I was a buyer today, I'd have my checkbook out and I'd be out buying because I think
Oh,
now is when the deals are happening.
absolutely. Me too.
I'd rather buy when I don't have to compete with somebody else. So whether or not, your buyers out there listening, now's the time you should be looking. And not because I want you to buy a house or anything like that, but because now is the time you're going to kick yourself when the spring comes and you got to compete with someone else to get a home. And you're not going to have any
All
leadership.
the stars are starting to line up for buyers to,
Just just
from
think
an
about
optimal perspective in terms of time to buy.
a simple thing to calculate is let's say you're going to have a $500,000 mortgage. Okay? And that's what your calculated number is. But you're waiting because you're hoping interest rates are going to come down. What does 1% difference in interest make on a $500,000 versus having a $400,000 mortgage instead of a $500,000 mortgage at a bit higher rate? Which one works out better for you? Buying cheaper and paying more interest will always work out to a better deal
Every time.
every time.
Yeah.
Because and the difference between Canada and the US is when you get your mortgage in the US, it's for the life of the mortgage, your rate
Yeah.
is. In Canada, we have term mortgages.
3 years,
3 years,
5 years,
5 years, renew.
yeah.
And if you get a low rate, or sorry, if you get a high rate, when you get about a point and a quarter below that rate, typically the savings outweighs the penalty to break the mortgage.
Oh, often, yeah.
So,
But in terms of that sale price, you can't go back to the seller later and renegotiate things.
yeah, sorry, man, I got it. I'm gonna need you to give me $100,000 back, or take 100,000 off because
Doesn't
it
work
doesn't
that
work that
way.
way. So,
Anyway, well, until hopefully the next rate cut, spurs a few more buyers off the sidelines, and when we get things moving. It's been a bit of gridlock as we've talked about before, and I hope we see a bit more activity before things start winding down for the holidays.
I think we got a couple of weeks left and then it'll taper off. But like I said, don't wait till the market has happened to decide to sell. Get ready now so when it does happen, you can pull the trigger.
Yeah, you got to act quick.
Absolutely. Have those
Well,
conversations. Till
we
next
probably
time,
went a
man.
bit, yeah, we probably went a bit long this time, but that's okay. Yeah, till then,
All right,
thanks for
man.
calling.
All the best. Happy shopping.
All right, see ya.